The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. First of all, I'm going to make one quick little check over here, and I will be able to get started here. First of all, we were in a situation where we were doing 6 flights in 8 days. We through Europe and went to Denmark. But I have to tell you, folks, the stretch that TFNN and Tom O'Brien has, you will not believe it. I had people coming up from Belgrade, Yugoslavia, telling them how they listen to TFNN all the time. I had people coming from Morocco, Tripoli, in the Arab Republic, Saudi Arabia, that they listen to it all the time. But the most unusual one was a couple from Kathmandu, Nepal, up by the foot of Mount Everest. This stretches, from the top of the world all the way down to Cleveland Street and Clearwater. But it was really amazing, and all the nice things they had to say about TFNN, and so that was really great. They said to say hello to, Steve and Basil and Tom and everybody. It was really a lot of fun, and of course, Plymouth, Massachusetts. They always call from Plymouth, Massachusetts. That's for sure. And if you have any questions, it's 877-927-6648. I want to tell you the highlight. Well, there's lots of highlights of the trip, but I did a radio show in Denmark, a 1-hour radio show. I don't remember which day it was. I lose track of the day. I think it was the 28th of October, and it was after we had a seminar for some professional traders there in Copenhagen, and so the radio people asked me to do a radio show, and I did, and they were asking me questions about the patterns that I see, and of course I have to talk about this long-term expanding triangle that I'm seeing in the Dow Jones and the S&P and the NASDAQ, the FTSE, and also the DAX, and just about everything else. And I was talking about the number of times this pattern works and what it doesn't, and what pattern recognition is all about. It's nothing more than probabilities, and we had some statistics that we talked about on the show, that showed that it has a higher probability of winning than losing, that type of thing. But the gentleman at the fellow, I can't pronounce his Danish name, something like Sergio, but it's not that. But anyway, we'll be on with our first caller in just a second. But the main thing that happened was we got down to what was the probability of this occurring, and I said, if you were an Olympic judge, you would have your paddle, and everybody would have a 10. It would be like a Mary Lou Retton, a total 10. And he got he says, well, how would you quantify it? I said, well, it's going to be life-changing for many people. And the gentleman said, do you think it would be like Armageddon? And I said, well, I don't know what Armageddon is, but it's going to be pretty nasty if it's correct. It's the exact opposite of what I was looking at in March of 2009. About 3 hours later, we were checking out of the hotel, and our guest host picked us up, and some people had called into the radio station. And for some reason, the word had spread that somebody from the United States in the stock market was talking about Armageddon in the stock market, and that's not what I was talking about. I think there's a big change coming. I wasn't talking about, Armageddon or not. And I'm only right part of the time. They didn't get that part. All they heard was the Armageddon part. So what you say and what people will hear are not always the same thing. So unfortunately, I had no way to clarify anything. So. It stands as it is. We got our first caller from Nashua, New Hampshire. Lou, are you there?
Yes, I'm here.
What can I do for you, my friend?
The S&P. Do you see it going much further?
No, sir, I do not. I believe that we are in the last days. If I don't think today will be the day because the Fed's in and anything can happen. But I talked to some very, very smart people in London and also in Copenhagen, incredible chartists and traders that showed me some of the things that I was looking at in a different light as far as day counts and things like that. And this pattern has all the earmarks of the exact opposite of March of 2009. It really looks so nasty. Lou, I get really biased on these positions, sometimes, and it, gets me in a little bit of trouble. And I've been waiting for this type of pattern. But today, we've had so far in the S&P, we've had a 5-point reverse wave pattern complete, and not only that, the S&P has exceeded the third top. In other words, it has a 3 drive to a top pattern with perfect ABCD. The top on that ABCD pattern came in at 1773 on the December futures, and that's exactly what happened. And I will post a chart in Tiger TV with the S&P showing you that, but it's really an amazing. But in the Dow Jones, Lou, which has been the weaker of all three, it's just barely making a new high, it made that very negative 5-point reverse wave that is, the one that's on the monthly chart too. So now we've completed it on the daily. And if the folks in TFNN and all of our listeners will just do a simple time count from the low we made in August to the high we made on September 18th when the FOMC meeting met once before, that was on the full moon, that was 16 straight days it went up. And since we made our low with all those aspects that we're hitting on October 9th, today's the 16th day. So you have the time between the highs is absolutely perfectly symmetrical. It's a perfect AB equals CD pattern. I mean, it's got everything but Mother, God, and Country stamped on it saying, I want to go down. Now, it might not, but that's what it's saying.
Right. Okay. I've got some S&P long options, and I got a bit of a profit, so I'm just wondering whether to take them off the table. Right?
I would just be real careful, especially with the Fed day today. Those people can do anything they want, and they usually do. So all I'm saying is if you get a chance, when you go into Tiger TV today, take a look at the S&P chart that I'm going to post, and you'll see it that the highs are equal. It's just such a perfectly symmetrical pattern, and it's coming in, very close to where the Bradley model, starts to turn between now and the 18th. But that's 18 days. It might go up another 17 days. You don't know for sure. But the pattern is certainly complete.
I thought the Bradley was on the 4th.
Well, it starts on the 4th, but it stretches all the way out to the 18th. And, that can be off by 3 or 4 days either way. So, it's just a guideline is what it is.
Right.
The pattern is what we look at, and that's the best thing to really look at. It's I think the pattern is there to tell us that it's very, very close to making this major top.
Right. Okay. Very good. Appreciate it.
My pleasure, Lou. It's always nice talking to you. And get ready for winter. I understand the groundhogs are saying it's going to be a pretty tough one this year.
Right. So that leads me to the next question.
Sure.
Natural gas.
Natural gas. What I'll do is I will post a chart of natural gas when we come up to the break, but I'll cover it most extensively tomorrow on the commodity show. I wanted to cover the currencies and bonds and stocks on this show because I haven't been on for a couple of weeks because of all the travels that I had to do, and I'm done traveling. And then, of course, when I get home today, last night, it was around 2 o'clock in the morning, my computers told me that I had no more data and no more drive space and everything else, which is totally ridiculous, but they're frozen up, so I'm waiting for the computer man to, work on it, so I'm still working off my laptop. So until I get all that fixed, I really can't do very much.
Okay, thank you.
But I'll cover it for you tomorrow, Lou, on the commodity show.
Great, thanks.
Yes, thank you for calling.
Okay.
One thing I wanted to mention, folks, on our flight back, we were on United Airlines, and we flew out of Heathrow to the United States, of course, into Houston, and the plane only had a 40% occupancy. I had not been on a plane with that little number of people since 9/11. I could not believe that it was that way. I mean, it was just absolutely amazing to me that it could be that totally desolated with this. Now, if you'll just give me a second, I'm going to put the chart up of this daily S&P that we were talking about, and you'll be able to see these. There we go. We'll be able to get in here in just 1 second, I believe, and you'll be able to see the symmetry that's here on this pattern. It's got a beautiful 3-drive to a top pattern, and what's really nice about it is the ABCD equals right where it should, but the highs between the high on August the 1st and then the high that we had on the full moon of the 18th, and now we had one today that is very, very similar to that. So that tells us that we're very, very close to what we think is something of a pretty good turn. We're down a little bit today, but with the Fed in there, this thing could move 20 points in either direction, without any movement at all. So it's important that we remember that at 2 o'clock, between 2 o'clock and 2:30 is crazy time, and that's when liquidity is the worst, and you certainly don't want to, be able to mess around with being in market at that time. That would be my guess. We had a request from one of our listeners about the VIX index, and I certainly want to bring that up. And if you'll give me 1 second here, because of the working on the laptop is a little different than working, on the desktop. It makes it a lot different. But we've had some really nice move up and moves down that were just as beautifully symmetrical as you could possibly get on a chart. And they tell us that we're getting ready to see another rally, coming in the VIX, which usually means lower stock prices. The VIX is up pretty good today, coming off of a bottom that was an ABCD type bottom, which was very good. But I think it's important that we keep an eye on something like that happening. Now, there's one other chart that I have to show you folks, because I know one of the things that we went through while we were in our seminars that we gave in London, and we also had some live trading that we did in front of a whole bunch of people on Friday, the 25th, which was a lot of fun, and fortunately it worked out really, really good. I have to bring this to your attention because it's one of the stocks that's in favor, everyone, and it's really a very, very active stock, but it was doing it just exactly when we were hoping to see something occur with it, and it was with the Tesla. It has made a perfect ABCD patterns for the whole month of October. It topped around 193, and then you can see the two ABCD patterns that were, and this is an hourly chart, so it goes back a considerable length of time. And and when you stop and think it's a $193 stock and it comes within $2 of the exact price, that's pretty darn good. So we're looking at that as a way of showing people that sure, these patterns don't work all the time, and not like nothing else does either, but what we are looking at is the fact that we are able to get them sometimes. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I know this is the regular stock hour, or I guess it's just my show hour. I don't know what to call it. I know my commodity hour is tomorrow, but we've got a situation in one of the markets that we watch very, very closely, and that is the crude oil market. We are flirting with the 61% retracement here, down around this 96.50 level again. So, by tomorrow it's going to be a long way from that level. It'll either be a lot lower or a lot higher. So this is what we're watching today as a potential low-risk buy here in crude oil, so that you don't have to risk an arm and a leg when you're doing, some of these trades that we watch for you on TFNN. By the way, if you get a chance, be sure to take a look at the automatic art of charting thing that they have for TFNN that picks the Gartley patterns, because this thing really does a terrific job for stocks and ETFs. There's really no other program that I've seen actually does it nearly as good. So if you trade ETFs and stocks, the Gartley program that in the charting package that does it automatically for you and scans the chart does a really, really terrific job taking a look at that from a technical standpoint. If you don't want to do your work yourself, that's something that you could do, and they do it. David White's done a terrific job, with the actual programming of it, so it's done properly. It's not something where you have to actually, make any guesses, or anything like that. I wanted to switch over to the currencies here because, we talked about the euro a couple weeks ago before I got off. But before I go to the euro, I wanted to show a chart on the 30-minute Japanese yen going back several days, because we've just completed, 3 lower tops, and it came in at exactly a 61% retracement of the high from the 16th of October and a 786 from the 22nd of October. So it should be ready to have a correction. We've already started to move down a little bit, but for some reason it hasn't gone down a lot yet. But they haven't got the message that it's supposed to go lower, but we'll certainly be able to see that longer term down the road. I want to switch over now, since we're in the currencies, and currencies is what makes everything move. This is what I think is the most important chart that I've looked at, other than this S&P chart and the Dow Jones and this the NASDAQ, and that is the Euro chart. And I'm going to post the Euro chart, and we're going to take a call from John in Philadelphia. John, how are you?
Hey, Larry, welcome back to the United States, sir.
It's a wonderful feeling when you walk down those steps at Houston and it says you're now entering the United States of America, and it's a really good feeling to be back. Even though it's fun to travel, we live in a great country. We got lots of problems like everybody else, but it's still a fabulous place to live, in my opinion, anyway.
Say, Larry, tell me, when you were on the island and then over on the continent, as you go through the airports, do those airports over there have things similar to the TSA here in this country?
Yes, they have. In fact, it's a lot easier to go through customs and everything in Denmark, of course, because it's a very small country, and I think they profile everybody because everybody looks alike. You can tell someone like myself, and Sarah was commenting, this was the first time that we've gone through an airport. We hardly saw anybody that was Oriental, Chinese, so that was real easy. But in London, even though they have a lot of tariffs and stuff, they still, going through is very, very quick. They don't ask you to take your shoes and belts and strip searches or anything like that. It's a totally different process. When you get back into the U.S. with, in Houston, you're back into the system where, they're checking everything. So it's something that you have to keep in mind.
Thanks for sharing that. Larry, I wanted to ask you if you could share your views with us on the bond market. Bonds are, 135.20 near the highs of the day. I'm wondering, do you see a rally extension coming here, or do you see any possibility of a turning point top occurring?
Well, I think the answer to that question is yes on both of them. I think that there's a little extension coming, and well, I do, and I'll post the chart into Tiger TV. The reason why I think that, John, and I see your charts because you're kind enough to send them to me, and I look for repetition in the market, much like you do. And so if you look at the market rally that we had during March and April of this year, and then where we are now, we need to get to 137.15. John, stay with me, please, for the break.
Very good. Sure thing.
You bet.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back and we're talking with our friend from Philadelphia. John, how are you?
Still here, Larry.
Good. Listen, we were talking about the bonds, but I wanted to switch the subject over to the 10-year notes because, as you know, they're about 3 times the volume and volatility not volatility, but 3 times the volume. Shorter-term paper is used quite a bit, of course, across the board in mortgages and everything else. But if you'll notice with the Treasury note chart, we have already exceeded, the March, April rally that we had last year. We've already gone another 50% beyond that level, whereas the bonds are still lagging badly, which is telling us, well, at least it's telling me, and this is where I'd like to get your opinion because you know how much I respect you as a technician. This is telling me that 30-year bond is just waiting to be sold.
Yeah,
you have an opinion?
That's a very interesting observation. I wish I knew the answer or the implications of that. Unfortunately, I don't. So that's why I was calling you this morning.
Yeah. Well, we'll have to call somebody else because I don't know the answer either. But I am going to look at 137 in those bonds if they get there because, that's an ABCD pattern and that would be a complete Gartley. But it's strange that the notes are so strong. And not only that, it's strange because there's no flight to quality because, there is a lot of money coming into the stock market. We've had record influxes over the past few weeks of investment money. And so it's just strange that the notes are going higher during this type of environment because usually that's the flight to quality play that they always talk about.
Agreed. The only thing that strikes me is with that 10-year note yield currently about 247, that either it bottoms and turns here, heads higher, or the scenario that Tommy O'Brien's been talking about of a decline back down to 2% even is likely the path. So as far as I see it, right here in this time frame at these price levels is the area where I expect to get some answers.
I would think so too. I would ask a favor if you get a chance tomorrow during the commodity show that we're going to have. I'd like to get your thoughts on corn again, John, because you have been spot on. And, you know, the whole world is bearish corn now, and I think it was 9 months ago that you said corn was going to 425, and we're knocking on the door now. So I'd like for you to call back tomorrow if you would, and give us your thoughts on corn, because no one's pegged it any better than you have, my friend.
Larry, I'll be happy to, and the monthly charts show some just fascinating patterns here with some key support, so I'll share that when I call in tomorrow.
That would be great, John, and thanks for calling in.
Thank you, Larry.
You bet. Okay, folks, the next thing we're going to do is we're going to switch over because we're very, very close to something really exciting happening in the gold market. We are within about $8 or $9 of the 61% retracement of this move that we've come back up down off of that 1250 area. We're talking about 1363. We hit 1360 2 days ago, and we've had a little quiet 2-day pullback here, and it certainly looks like gold is ready to go higher to the upside. The thing that gold that's really interesting about gold here, folks, is that when we hit that Fibonacci number of 1170, way back at the end of June, we came down perfectly to a 61% retracement in time and price. Now, if this is correct, and like we were looking at Tesla, and we've done this with Apple, and we do it with everything because it's the same pattern that we look at. This is going to take gold very quickly to the $1,500 level. I'll put this chart into Tiger TV so the folks can take a look at it. But it really has a tremendous potential to get there if we can clear. We need to clear 1370 first, and then of course 1395. But then 1500 is the level, and if we get to 1500 really quick, folks, that's telling us that 1900 is going to be knocking on the door. That's how bullish this chart could be because of the way that it's set up with all the Fibonacci numbers coming together perfectly. And gold is one of those things like crude oil in the stock market that hits the number sequences, just spot on when you're looking at them. So that's something that is in my watch list, and so it's very, very important to watch this level of 1365 in the gold over the next couple of days. That's the one that really is a very, very important one. But as I mentioned before when we were talking about the euro is the one that has the most interesting pattern because we have, I'll bring this up and talk about it again because it's such a powerful pattern on the daily basis. We've hit so many numbers up here at this 138.15 level. And it was really, in fact, this was one of the charts that we did actually 2 trades that we were watching when we were trading live in London on last Friday, and one of them was the euro, and the price level we were looking at was 138.15, and it hit a high of 138.25. And of course, people, they didn't say very much, no oohs or ahs or anything like that. But the market started to move down, but it's still far away from a major turn of any time because with the Fed in there today, could easily take that high out above the 138.50 level, and then go on up to the 786 near 142. There's probably something going on with the bonds and the U.S. dollar, where they're going to try to make our dollar just very, very cheap, so that when they're paying these bonds and note holders back from Japan and also from China and Russia and all of our foreign holders, they're going to be paid back in basically funny money, a cheaper dollar. And that's not going to happen because nowadays these countries are pretty sharp, and they will start dumping their bonds and notes in order to get the money up front. That's the way I look at it. So you've got to be really aware a global scenario of everything nowadays, because we're all interlocked with all these asset movements and all these classes. I always remember one of Warren Buffett's quotes was that we live in these financial things that they've developed are weapons of mass destruction. And it certainly sometimes it certainly looks like it. And we've already been through it with the TARP thing and the credit default swaps and all these other things. And that stuff is still going on, folks. These banks have not learned their lesson at all. And of course, the CFTC and the NFA and the SEC has not really slammed the door on anybody. What do? They give somebody a $1 billion fine. Well, if you made $4 billion, you get a $1 billion fine. It's no big deal. It's like paying a double tax. Why don't you put them in jail for 5 to 10 years? Make the skin in the game really count. Take the skin off the hide. And if not only that, but the $1 billion it's paying is from other people's money, because, that's basically where it came from. And I have the greatest respect for Stevie Cohen, and I don't know why he's, I think I know why. He just wants to get the government off his back, and if it costs him $1 billion, that's what he pays for it. That's exactly what J.P. Morgan did. They just paid, I think it was a $5 billion fine they're going to pay. That was all over the news in London. $5 billion. That used to be a lot of money. Evidently, I don't think it is anymore, but it used to be a lot of money years ago. So we'll see what happens. I still think that this too big to fail thing is going to come back and bite us somewhere. But we'll have to wait and see if in fact that's really going to be the case. And I don't, we couldn't get away with something like that. I don't think there's any question that we're not able to get away with something of that nature. Someone asked for a chart on silver because we were talking about gold, and I have one here, I believe. I'll pull it up here. I've got my trusty little laptop, and we should be able to make it. Yeah, there we go. We should be okay, and you'll be able to see silver is actually above this area we talked about just, I think the last time I was on the air about 8 days ago, and silver is actually moving up to that 61% level faster than gold is, which is a pretty good thing for these guys, because the silver is the poor man's gold. All we need to do for silver is to clear $24 an ounce, and that's only $1 an ounce from where it is right now, and it's having a really strong day today, approaching the 61% retracement of the high that we made back in September. So these metals are really starting to look good. We felt that was the case. Now, the only other thing about the commodity markets is what's going to happen to these grains, because they've been hit so badly over this past 3 or 4 weeks. Wheat is broken down badly. It really gets moving a little bit faster than on the downside than some others. The question someone just asked me was, does this mean anything where silver is acting stronger than gold? It does to me, because I've been trading silver since it first started trading back in 65. That's 1965, not 1865. But the silver is like 1/6 the liquidity and volatility that we have in the gold. But it brings in a lot of small specks and sometimes large specks too. But when you see silver start to move, that means people have an interest in it. And then since they move together, what you like to see in a bull market is you like to see silver outperforming gold, because gold holders tend to hold for a longer time than silver holders. If you understand what I'm trying to say, they'll hold their positions a lot longer in silver. If you'll remember, when the silver was making its top in April of 2010, up around $49, we were watching the open interest and the volume, and the volume was dropping, open interest was dropping, and it was screaming at you that everybody was leaving the market. And that's what happened, and the market reversed, and then certainly had a big move to the downside, and now it's trying to make some type of rally back. It's on a long-term basis, it's far lagging gold on a longer-term basis, but recently, over these past several weeks, it's perked its head up, and it's showing like it wants to hold together really pretty nicely. Now, I had one other request for a chart, and I have already done it. I just remembered. I beg your pardon. I wanted to bring up the NASDAQ, because that's another one that is really interesting, especially on a long-term basis. We have completed some big things here, folks, and we are looking at a whole lot of patterns that come together. If you'll give me 1 second, I want to draw in the really large one that's here, because we've completed just about everything in the world in the NASDAQ market, and it's along with some of the others. So we've got to take a little break here. Not yet. Hold on a second. And then I will do the Canadian dollar. Someone's asked me for a chart on the Canadian dollar, but we've completed all of the patterns in the NASDAQ, all of the patterns in the Dow Jones, all of the patterns in the S&P 500. We're coming into this time zone of November. We got a Bradley dates that start from November 4th, which is Friday, and we got a new moon coming in within a day or two of that. So it's going to be very, very interesting to see these things come up. Now, I believe that the Canadian dollar, and I'm going to do the way that I look at the Canadian, which is the reverse of what most people do, because we trade the Forex spot, and they charge it a little differently. But you'll see that we're almost at 105 in the Canadian dollar here, and that would complete a Gartley pattern. If you'll give me 1 second here, I want to draw it so that you're able to see it very, very clearly, because it forms two patterns at once. One, it forms the Gartley pattern to sell it up here at the 105 level, but then it forms one of the most bearish patterns that you can find, and that is the 135, the lower tops. And the lower tops are the one we had one in August, which was lower than the top that we had in July, and then now we're having a lower top in October, which is lower than the one that we had in August. And the time frames between these highs are quite symmetrical too. So this is telling us that the Canadian dollar is also getting ready to turn, and this is positive influence for the U.S. dollar, that this level of 79 is probably going to hold. But folks, let me say something very emphatically here. If we go below 78.50 in the U.S. dollar, there's no support. I mean, that would mean the euro is going to be going to 145 or even 150. I mean, that's how bad it is. Maybe it's going to be something that the Federal Reserve does today. You know, I don't know. And believe me, it's not very smart to be in there trading at 12:15. It's 2:15 Eastern, 2 to 2:15 Eastern time when they're in there, because anything can happen crazily, and it usually does, mainly because liquidity dries up, so much. So that's something that you must pay attention to on Fed Day. The last time that happened on the FOMC day, I believe we had the largest up move in the stock market, 300 points that day of the year. I wanted to share two statistics with you, and I hope I get them right, because I'm doing them from memory. This is the first time in the past, it's only happened 3 other times in the past 40 years, where the S&P 500 has never had a negative week. In other words, it's always been closing higher all the way up. This is just, it's either had a higher high, it might have closed lower for the week, but it made a higher high. The other statistic that has been really amazing is the number of times that the market bottoms in September and October is one of the strongest statistics that you can have. And this is only the third time in, I believe, the last 62 years that this has reversed itself. We're going to take a little break here, and then we will talk some more.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I'm going to finish up the show here with a couple things. I was going to talk a little bit about the gold-silver index, the gold stocks and silver stocks. They bottomed pretty much a couple of weeks ago when we were talking about that Gartley that came in around the 85 level. That was a perfect ABCD. That was one of the reasons why gold held so strongly at that 1250 level, which was a 61% retracement coming off of the 1170 fib point. So these are things that are, and it's coming off real fast, folks. That's telling you that it wants to go higher, at least from my experience. So the gold and silver stocks, if you get a pullback in those, they might be, outperforming the market because they have underperformed the market for the last 3 years or so, as we've seen day after day, week after week, and then especially with the copper components of that index, it's really quite awesome. I would like to mention again today is the FOMC meeting day, so things are going to get very, very squirrely and very, very crazy. We've reached all the objectives that that I can find technically in the market indices, the Dow, the Bradley, or the Dow, the S&P, the New York Stock Exchange Index, and the Dow has been lagging badly, by the way. It's barely making a third top, where the others have made 1.618 or even expanded past those. But be very careful in here on your long positions, because we do believe that the Bradley model is getting ready to turn down, and there's no sense being a hero, and you got to take some money off the table once in a while. And believe me, Armageddon is a city in southern Arkansas, so you don't have to visit there if you don't want to. But anyway, what you want to do, folks, is to be safe. And if you long these things, put your stop under last week's low. That's really all you have to do, because it's been up so many days. I mean, we've had equal days, 16 straight up days. In other words, higher highs or higher closes, 16 days during August and September, and October to where we are now. That doesn't happen very often. We've got 2 outlier events back to back. That's putting records in the record book, folks, and they don't put records in record books at bottoms or bottoms. They put them in at tops, most probably. So be very careful here. That's all I want to alert people to do. I felt relatively uncomfortable about the Armageddon word that they used in Denmark, because I didn't use that. Somebody else used it, and they attributed it to me, and all I was saying is just be real careful, up in this level. This is the exact opposite of what we were seeing on March the 9th and March the 5th of 2009. If you could turn those patterns upside down, that's what you'd be looking at. And if you remember watching the news, what's his name? I can't remember his name. The head from Goldman Sachs was asking for money. The Secretary of the Treasurer saying they needed $770 million. Well, they got that, plus the Fed has dumped in another $2.5 trillion. So, things were pretty bad at that time. And we've had a straight up move pretty much over the last 4 or 5 years. And yeah, Hank Paulson, that's who it was. Thank you very much. I couldn't remember his name. I saw his face enough, but I couldn't remember his name. Anyway, those are the things that I think are really important to look at. So we'll be on for the radio show tomorrow with commodities. A lot of things have happened in the last 2 weeks that I haven't been able to be on. We've had wheat and corn and beans really have some really serious moves to the downside, and yet we've had others that are starting to look really interesting. One, of course, is crude oil and natural gas, and also the gasoline futures are starting to look pretty interesting also. So live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.